Hello, everyone. Thank you for joining us. This is our second webinar to have Tina with me, to have Unitatis with me. Especially this is a focused topic. And I really, I just want to remind everyone, this is still a very early stage of the government economic response plan. So we do anticipate that there's going to be follow-up webinars once more detailed information actually comes out. And also the government is also promising that there's supposed to be additional support programs as well, especially once we dive into today's material. You're going to see whether the current programs actually apply to you or actually meet your expectations, because there's already been feedback to the government that the program isn't what, it's living up to. So people and businesses definitely are looking for more support, more substantial support from the government.
Hi, everyone. This is Tina from Unitatis. I receive a lot of calls, emails, and WeChat from different communities. They eager to know more about the policy, about the relief guidelines. It seems like a little bit confusing, some part of that, and some part of them a little bit complicated. So that's why we're here today and trying to see, we're trying to explain and trying to explore what are available and who should be eligible and who should take action or not take any action.
Sometimes not knowing the answer is also the answer.
Yeah.
Now let's start with an overview.
Right.
We are looking at a total of 12 programs, and this is after what we've done is basically we've gone through the economic response plan. We kind of taken a scientific approach by drawing all of these sections and then categorizing them and combining the similar programs together. Overall, you're looking at 12 programs, and some of them may be actually fairly complicated to understand and calculate. Now, those programs divide into two main categories. We have what apply to a person or family, and we have what apply to basically
the
businesses. Just keep in mind when we say business, I know a lot of you actually especially come from a creative industry. Sometimes that person business may be a borderline, maybe a little blurry because you've incorporated or you're self-employed. So keep in mind when we say basically person, there we go. So when we say person, it means that you are filing your personal tax as an individual or family, right? And when we say business, we're basically saying that you're filing your tax as a corporation as a separate entity. Now, on the personal side, we have three subcategories. We have EI, which obviously is always the primary support for individuals.
Yeah, especially for T4 employees.
So EI mostly is T4 employees, and we do see some non-traditional EI as part of the program, which will help everyone to understand. And then we have tax benefits. So those are your general, tax credits, anything related to CRA. Then we have mortgage, which is mortgage deferral. And we'll also explain the pros and cons if you're interested in the mortgage deferral program. And then on the business side, what we have is basically we have payroll for the business. Then we have tax benefits, again, related to CRA. And then we basically have the loan, which could be from private sector. And then there's also the Crown Corporation through Business Development Bank of Canada that's being injected by quite a bit of funding from the federal government. Now, let's move into more of the details. So starting with obviously looking at the personal side of what applies to individuals. Actually, what I think we should do is we should pick the easy subsections first.
Let's do that. I mean, EIs could be very complicated and time consuming. Let's start with something a little bit easier.
So let's ease you into this basically. So if we look at what applies to person, I think the easiest one to understand is tax benefits. Because tax benefits, majority of it, you don't have to do anything, right? Except to file your personal taxes
returns
on time. So really the first one we have is the Canada Child Benefit. So that's $300 per child.
This is almost like additional benefit on top of what you already have on your CCB. So we know based on your last year or previous year tax return, the government will calculate how much CCB you're eligible to. So during this relief plan, they also launched this additional benefit for every single child. Maximum you can receive $300 from the government, and there's so far no cap for the family. So this is for sure something like additional help for families with children.
And it's $300 for the year. Just to
For
clarify.
one time.
It's a one-time payment. It's not $300 per month per child. It's just $300 per basically child for the year.
That's right. And so this is a very good time to actually remind yourself to see if you already filed your 2018 tax return, because all the additional benefits or the regular benefit is based on the previous tax return, and then the money was distributed for 2019 to 2020 year, right?
Yes.
So if you didn't
and this
file
starts
return,
in May.
May, yeah.
So keep in mind, because this is actually related, both the Canada Child Benefit and then we have the GST, which it's similar, it's $400 to $600 basically
per family maximum
for the year.
For the year.
So
and
this is
a
also
one-time
for the year.
Yeah, one-time benefit.
Yeah.
So basically, again, if you already filed your 2018 tax return, if you're eligible to receive GST credit, you will get additional $400, and for the family will be maximum of $600.
Both of them are related to what we'll talk about for the deferred tax filing. Exactly. So for the deferred tax filing, this is basically the government, it's saying they can give you up to June 1st to file. But what we're also recommending is, as you will see for the Canada Child Benefit and for your typical, GST benefits, they start in May.
Yeah.
So if you don't file your taxes before the end of April, then basically those programs for the first, May payment, you won't actually receive them on time.
Exactly.
So tax deferral basically doesn't apply to you.
Yeah. So we would recommend that you file your return as soon as possible. However, for the tax owning or the tax money you have to pay to CRA, we can wait a little bit until August, the end of August. That's totally fine.
So if you owe money to CRA, then definitely the payment can still be deferred until August 31st. Yeah, so really, the tax filing deferral to June 1st, we just don't see any benefits of that. So definitely still proceed with your typical, personal tax filing. And if you owe anything, that can wait till August 31st with no penalties or interest.
Yeah, that's fine, because in a hard time, I guess everyone need a little bit of breath, right?
Yeah.
So you can wait, but for sure, please file your tax return as soon as possible, because all the benefit, all the government, subsidies,
they all start in
May. Exactly, based on your tax filing.
Yeah, and especially, I guess the tax deferral filing is more if you actually have to go see an accountant, right? If you actually have to meet someone in person.
Yeah.
But CRA also just released that they're accepting digital signature for for basically your authorization form.
Yeah.
So you don't have to go meet the accountant in person anymore. So, which basically, that's basically meeting the requirements of filing. So you can do it digitally.
Yeah, I think at this moment, all the government and the accounting firm is trying to working really hard for every single ordinary people. We're trying to provide like online service, remote signature, e-signature are acceptable. Unfortunately, this deferral tax filing doesn't apply to self-employee, because usually
that's already June 15th,
June 15th
for the filing deadline anyway.
Yeah, we don't know if they're gonna be a further policy. Let's say their payment could be extended until August 30th. Nothing has been really announced yet, but unfortunately, this is not applied to self-employee.
And keep in mind that when we say payment deferral, right? When we say no interest or penalty until August 31st, that's only if you owe taxes after filing.
Yeah.
So anything you own prior to this period, it's still compounding interest and
penalties.
What CRA did say is they said they won't call you. They won't
There's
call
no
you
collection
for 4 to 6 weeks, but whatever you owe, it's still compounding the interest and penalty.
Yeah.
Now that's the easy one on tax benefit. So next one we have is mortgage. So mortgage, this is offered through private banking, right?
Yeah.
Which it seems like the common one, it's a 6 months deferral program. So
Yeah.
you can defer your mortgage payment for 6 months.
All 6 major banks, I think most of us dealing with on a daily basis has already announced their policies.
Right.
Even though there's like a minimum difference, but the majority of their criteria are very similar. So basically they will ask you different questions like what's your current financial status? Did you lose your job or your family income has been significantly reduced? Then once you answer all the questions, they will do like a simple assessment, I would say. And then once that's done, they will give you up to 6 months deferral. Right. Yes. So it is including
still pending individual, still pending approval and individual cases. So the one thing I just want to quickly show everyone that we will share is obviously, it may be challenging to actually get in touch with your mortgage broker or your bank specialist at this point. So after the webinar, we will be sharing a contact information. So this is a contact card for actual mortgage payment relief. So you can find which bank or provider that actually meets, your service, and you can contact them through there.
Right now we have Scotia, we have TD, BMO, National Bank, CIBC, and yes, RBC are all providing like a similar deferral program right now.
Now, the one thing I do want to caution everyone on the deferral program is, and I read this on several case studies we were looking at, right? Keep in mind, if you're at the early stage of your mortgage, your interest payment could be fairly high. So let's say if you're paying $2,000 a month for your mortgage, that $1,000 of that could be interest payment. And what happens is, yes, you're deferring your mortgage for 6 months, but that interest payment is actually being added back to your principal. So let's say if you have $1,000 per month for interest, you defer that for 6 months, that's $6,000 that's being added back to your principal. And if you have another 10, 15 years on your mortgage, that $6,000 is being compounded over 10, 15 years time. So you're essentially, by deferring for 6 months, you're essentially incurring could be $10,000 plus in interest charges. That's actually fairly high. So definitely keep in mind, what I recommend is make a list of, once we've gone through the programs, make a list of which programs apply to you and what's the real cost of each program. And prioritize, right? If cash flow is really low, if you have to take mortgage deferral, then at least know, right, but at least know what's the cost associated with it. And if you have other programs that may be more beneficial before, you actually go for mortgage deferral.
We don't want you to defer your mortgage payment, but also defer the crisis, right? Like 6 months later,
for sure,
everyone start to feel the burning, right? So this is very important to kind of like Yifei suggested, make a list and to see where we started. Maybe the deferral is one of the options, but maybe other things we can also think about.
Maybe it's not the best option. Now, especially for a lot of business owners and for freelance people, this is something we actually discussed in the last webinar, which is the alternative mortgage options. Now, if you are on the alternative mortgage options, like we said, Manulife One, which basically acts like a huge line of credit, then you have a lot more flexibility as a business owner. Because with that huge line of credit, you don't pay like traditional mortgage like set amount at set time. You actually have control and you can actually defer that, right? What happens is just the interest will basically same thing will be added back to your main, overall line of credit. As long as that amount doesn't exceed your overall line of credit, you can really defer that.
As long as you still have the room. So every single dollar coming into your check account is working for you rather than just sitting there doing nothing.
And you're in full control of that.
Exactly.
You can say when to stop. You can say when to increase payment again. So that's a different option if you're not on the traditional mortgage side.
That's why, a lot of people transition from let's say, regularly like an employee to a self-employee or even incorporated. So their mentality also needed to be switched to
think
taking
more
more
like a
control.
business.
Yeah, like a
Yes.
business owner,
Yeah,
right?
because when you're on payroll, it's easy. Everything is done for you.
Yeah.
But the moment you actually run a business or even self-employee, run a sole proprietorship,
Yeah.
then you do have to look at non-traditional options because in times like this, it's when you really see all of that planning ahead of time really coming in to help.
That's true. Yeah.
Now,
Oh, the
EI.
EI one.
EI.
Our favorite topic.
So EI, we're looking at three EIs. Obviously, your traditional EI, that's what everyone's kind of familiar with, right? If you're on payroll, you lose your job, you get ROE, and you go apply for EI.
Yeah.
So even for traditional EI, keep in mind, right, it has to be certain criteria. So if you quit your job, if there's labor dispute, prior to, none of that applies. It has to be you actually lost the job due to shortage of work, due to, let's say maternity leave, due to any of those reasons, then you can apply for EI.
Yeah.
Then we have the other two programs that came out, which a lot of freelance people are interested in, which is your emergency care benefit and then your emergency support
the benefit. Yeah.
So-
Before we jump to the emergency care and the emergency support benefits, I just want to mention about the EI. So right now, I think the government kind of like gave us a little bit of release on the traditional EI. That's why there's already more than 500,000 people apply for the EI. So we traditional have 2 weeks waiting period, and right now
1
we
week.
changed it to one week.
Traditional is 1 week.
So
right
they
now,
waived
they waived, they waived it entirely.
Yeah, so you can apply right away, like regardless of your as long as you qualify for the
Right.
EI.
Right. And we'll find out if you actually qualify for EI.
We look at the details together. Then.
Yes. So first of all, I mean, a lot of people actually were surprised by how much EI actually pays. Right. If you never looked into, EI, then you probably will be shocked by the amount because you're looking at 55% of your original pay. Now that's capped at a maximum of $573 per week.
That's right.
And again, capped at maximum of 15 weeks. With you still have to do biweekly reporting. You have to show that you're actively
looking for the
work.
new job, and then you are trying to different like maybe education for new jobs. You have to keep basically reporting your status.
activities. Yeah. And if you look at that, that's still the maximum $573 per week. You still get CPP and source deductions on top of that.
Yeah.
So the net you actually get in your hand, it's somewhere around $1,800 to $2,000 a month. Maximum, right? And when we say 15 weeks, basically you're looking at 3.5 months only.
And all of them are taxable. So
all of them are taxable. Yeah. So that's your traditional EI. Now, if especially for freelance people, if you don't qualify for traditional EI, we're looking at 3 additional, new programs.
Yeah.
One is the emergency care, which is basically the original sickness, the EI sickness program, right? And that's even lower amount. It's max of $450 per week for maximum of 15 weeks. But from what I understand, is the criteria for the emergency care benefit for the sickness has been changed a little bit.
Yeah. So right now there are 3 categories where you can apply. Either you yourself got sick or affected by the COVID-19, or your families, you have to stay at home to taking care of your parents, your spouse, your children, or if you have a children who have to stay at home because of the school closed. Then you kind of like lose your job or cannot go back to work.
Almost like a form of childcare support.
So every person have a $900 entitlement
bi-weekly.
But right now there's not clear guideline right now because all the details information will be announced on early April, hopefully next week. So we don't know, for example, if there are a family of 2, like a spouse, both of them cannot go back home. Yeah, can they both apply? Can they apply the full amount, or it will be prorated? And the people who separated, but they still have to take turns, take care of their children, who got divorced. Like there are so many
questions that they haven't. There hasn't been a detailed program to answer any of those questions yet.
Yeah.
So for now, all we know is it's a max of $900 bi-weekly, which comes down to $450 per week.
Yeah.
And again, max of 15 weeks
That's
as well.
right.
Then the next one is the emergency support benefit.
Mm-hmm.
So that's the one for those not eligible for EI. And
Yeah.
it seems to be a lot of people are interested through. That's a lot of that is applying to the self-employment.
That's true.
But there are also some conditions such as, you have to apply through the special self-employment EI program, and you have to qualify for that first, right? Which is an arbitrary decision, again, for when you actually submit your EI application.
Yeah, the support benefit so far has no detail, not really much details right now. So, but we'll already decided that we're gonna have a second webinar.
Yeah, we're gonna have a second webinar once the detailed program actually is released.
Yeah.
One thing I want to mention is, so sometimes people think, right, okay, I can apply for traditional EI, and then maybe, my kids can't go back to school, and now I qualify for emergency care as well. So if I add all of those together, it's
not bad.
It's not bad, but you only get to apply for one program.
Yeah, usually they restrict only one. You cannot apply multiple different programs at the same time. So next one is also interesting. The work sharing program also is pending. Unfortunately, we have some details, but it's not really easy to implement. So we can maybe talk a little bit more about the work sharing program in our next webinar. Right now, I think really it's a due decision making
between
the employer and the employee.
So it has to be the business and you're making the decision together. And also keep in mind, the work sharing program is the employee has to be a core employee, right? Yeah. So really a lot of this is affecting a lot of the current virus situation is affecting, freelance contractors, right? Individuals who don't qualify for your traditional payroll, which your work sharing program is not going to apply to you because you're almost seasonal work, your contract work. You're not actually considered as a core employee of the business. Exactly. So in that case, you can't apply for work sharing program anyway. And the work sharing program is only if your work is reduced between 10 to 60% from your traditional workload. And as a result, your salary is reduced. So also doesn't apply to, let's say if you're on annual salary as your position, that doesn't also apply to you.
Yes, that's true. And also remember, as I mentioned earlier, it has to apply and the employer actually have to provide a quite lengthy list of documents to the government to show, for example, how many hours they are cutting right now, and they also have to provide the recovery plan.
And they have to provide proof.
Yes,
they have to show financial statements from, let's say, a year before to show the month-to-month comparison to show it's actually decreased in the current month compared to last year. So there's a lot of justification that the employer, basically the business, has to make before you even become eligible for this program. And keep in mind, EI, we're talking about traditionally 50% of your original pay. So if you discount that by the 10 to 60% of your work reduction, then really there isn't going to be much.
And just considering, the workload, right? The employer and the employee had to work together.
The amount of work.
The amount of work is tremendous. So really, we have to weigh the pro and the cons to make a decision: take action or no action.
Right. Now, moving on to if having gone through all of the requirements and conditions, now if you qualify for any of the EI programs, so here's the process. And again, if you never applied for EI, you will see EI is actually not an easy process to go through. So first, you need to apply as soon as your work is reduced or as soon as you qualify for all the requirements.
Within 4 weeks, people after 4 weeks, actually, people will losing the eligibility and they are not able to apply for EI anyway.
So if you wait for more than 4 weeks, you can't even apply for it anyway. Then second is all the application is done online. It's all done digitally. So again, we'll share the PowerPoint with everyone. There's already links provided.
From Service Canada, they have step-by-step instructions and help you to work through all the processes.
Just a reminder, if you don't have your digital CRA account, It's a fairly
yes.
difficult process to go through because there's a personal information verification.
Yes.
So you really have to make sure that you prepare all of your information ahead of time. Make sure you have your CRA account. And if you haven't registered for CRA account, that process alone can take up to 2 to 3 weeks.
Yes.
And given that the current situation with CRA, it may even take longer.
And the Canada Post also reducing their working hours.
Yeah.
Just imagine how long
so
you're gonna
it's
take.
a domino effect.
Yeah,
So keep in
everywhere.
mind, get everything prepared before you actually go through the program.
The
Next is you need to provide all of your required documents. And ROE, record of employment, is provided by your employer, by the business. And then if you're applying for the emergency care, then medical, some of the medical requirements is waived, but not everything, not all of it. After that, then it gets easier. You receive your access code, you report online every 2 weeks. Now, the other thing is keep in mind your first payment only starts. So the whole process takes about 28 days to actually get approved.
Yeah.
And then your first payment will start. So it doesn't start right away.
Yeah.
So if you're looking for benefits right away, it's not going to happen.
Yeah. So that's why it's very important that regardless of the government benefit, ourselves had to be prepared for the emergency fund, like we mentioned and discussed in our last webinar, right?
Yeah. So you still have to look after yourself.
Yeah.
Now, obviously, looking at the EI program, so this is why we really wanted to discuss EI a little bit in more details, because from what I understand, a lot of the freelance or business owners, when you're looking at, when you have consistent work, not everyone goes to look at the whole EI process.
Yeah.
Because once you do and you look at how much you end up getting, it may actually, and how long it actually gets. And if you waited, 4 weeks already, then you may not even qualify if you don't have your CRA digital account. You can't verify your information through Service Canada.
Yeah.
By the time you get everything done, the required timing may already have lapsed. So it's definitely important to keep everything in mind. Now, I specifically wanted to talk about the ROE because that's actually related to business, right? Record of employment. And again, coming from film production and knowing a lot of the contracting type of business, right? Construction businesses who just hire people based on their individual projects or hours worked. Issuing ROE can put quite a bit of burden on the business.
Because they probably just working for multiple different
it's not a set. It's not a set salary. It's not a set amount per week that gets paid. So just issuing one ROE can actually take quite a bit of time for your accountant if you're running an actual business. And even for individuals, if you're actually requesting ROE, especially from production and contracting type of work, you know that it's actually a fairly lengthy process because you're not doing traditional type of work. So for accountants to actually go back to find, they have to find past 55 weeks work record with each week how much you earned and how many hours you actually worked to determine you actually qualify. And again, going back to production people, you may be working for multiple production companies or contractors. You may be working for multiple businesses or employees. So you have to request ROE for each one. And you have to add the hours, right? 55 weeks, each week, how many hours, all the hours adding together, does it qualify for the minimum, 600 hours, as you're to pay meeting the minimum requirement. So all of that has to add together, which again, for business, it could put quite a bit of burden on the business, especially let's say if you have a production company and, a single project, you could have 30, 40 crew members on it. And if your accountant can't go back, if you don't have, if you didn't prepare the business to actually have everything online, digital, then this could be challenging for even the accountant to go back and find all of the record to be able to actually issue ROE for you.
That's true.
So even for businesses, especially keep in mind, right, a lot of times if you understand all of the requirements for EI and then communicate that information with your employees ahead of time. And they may discover that they're actually not eligible and it will actually help to reduce your workload quite a bit as well.
And this is also one of the retention strategy, right? Communication is always never
Important.
It's
Yeah,
always
times like
important.
this,
Yeah, yeah.
for sure.
Since
So
we're talking about the business, let's look
so
at
we'll lean into the business side.
Yeah.
So really, like when you look at the strategy from the government, really what we're discovering is on the personal side, what you get from the government, anything through EI, right? Anything through tax benefit, they only cover, it's the government's goal to only cover your bare minimum. They're not here to support your comfort or, even luxury at times. So if you're thinking I'm making, 8-10 grand a month from contracting jobs, I'm doing great. And if the time, if anything happens and my work reduces, then I can go back to EI. All of this program would actually help me. You will see they only help to the very bare minimum. Just basically, it's the government's role to make sure people can eat, can feed themselves, not getting evicted. But they can't be here to support your comfort.
Regular, yeah.
Majority of the funding is actually going into supporting businesses, because the idea is if they support businesses to basically, have the individual businesses to look after their own employees, that's what really injects into the overall economy, right? It can be the government actually helping all the individuals.
Yes, that's true. I found that this time, I think they did really consider, how to help the business to, go through this very difficult time period, and they really launched this payroll program, which I personally very like. I think this is one of the most effective way to help the small business or medium business to go through the difficult time.
For sure, and for them to also help their employees
as well. Yeah.
So this payroll subsidy from the government is actually it's the easiest we've seen out of all of the programs.
Yeah.
Right. So basically, it's 10% for 3 months. So from March 18th to June
20th.
So for 3 months, basically, you can receive 10% from the government for 10% on any gross payroll that you're running.
Yeah.
For maximum of 25,000
per employee
per business.
Per business.
So if you look at 10% for maximum of 25,000, that means basically $250,000 of your payroll qualify for this. That's actually not bad at all. The max per person is capped at 1,375, but that means it's 13,000 for the person. So that's still fairly high when you look at the amount. And get this is automatic. You don't actually have to go through application program.
And wait until it's approved.
Yeah, and then wait another 28 days before you actually get payment. So this is actually automatic. So what you do is when you remit your payroll source deductions, you just do the calculation and you simply, do the 10% that you qualify, simply just deduct it from what you have to remit.
Yes.
So this is really helping.
Yeah, so basically you are remitting for 90% of your gross payroll. Just the one thing I think we probably want to just pay a little attention. They do have a lot of complicated
because this started on March 18th. They didn't start with a new pay period.
So you have to prorate it for certain months and then give you full amount for certain months and then prorate it again. So a little bit complicated, but I'm sure.
Yeah, so make sure if this is something you're interested in, just make sure that you pay attention to the calculation to get the numbers correct, and make sure that you show the actual calculation while you're actually going through it. Just keep the record, because I can't tell you how many times that CRA may have errors when they're calculating it.
And sometimes it's very basic, like a fundamental mistake, which nobody ever gonna believe that will be made
from CRA. So if you're doing this, make sure you actually show how you calculated it, show the backend report when you're actually reporting payroll with CRA. Otherwise, you may actually run into just back and forth of CRA sending you amounts owing, compounding interest, and things like that.
Yeah. So, but I think the easy thing or the rule of the thumb is, excuse me, just to look at the payroll and basically if you are running the payroll and the 10% is more than 1,375, it will be capped. And if it's less than that, for one individual employee, and if it's less than that, just basically you just remit the actual number, so you don't have to worry about too much about how to do that.
So I mean, overall, basically, if you have the case study we put here, let's say if you have 1, 2, 3, 4, if you have 6 employees and you have a total of 21,000 for the month, then your potential reduction overall for 4 months is 23,000.
Yeah.
So that's fairly substantial for small to medium sized business, right? Anywhere from 5 to 10 people.
Yeah.
That's actually fairly substantial. Now, if you have so going back to, there are some other requirements
for to apply the payroll. You have to be what they call a small business. So first criteria, you has to be a CCPC, which stands for Canadian Control Private Corporation. So this is, I think, most of the incorporations apply that criteria with no issues. And the second one, you have to be qualified for the small business deduction, which is $500,000. So if your profit is exceed, you are not, technically speaking, considered as a small business.
Right.
And the third criteria,
I mean, $500,000 for profit.
for profit.
That's really high. I mean, majority of the small medium sized businesses won't meet that number anyway.
Yeah, and the CRA also have put a little bit more strict rule. I guess it's just trying to avoid people should take abuse this system. So they also put a working capital on top of the earning profits. So basically, they say if your capital is less than 15 million. And if your profit is less than $500,000, then you qualify to be considered as small business.
So basically, 90% of the businesses in Canada will qualify for this.
Yeah.
And like we said, this really is the easier program, right? It's really simple to get started with.
And it's very helpful.
Yeah.
I mean, I guess the government is trying to, again, working really hard, trying to motivate small business owners to keep your regular payroll. And also because you're keeping the payroll, every employee bring checks, right, back home, so their family won't be impacted that much, and everyone working together. And I think this is the hardest time we've ever seen. And then everyone, the business owner, the employee or self-employee, we
Just
all working
encouraging
together.
everyone to work together.
Yeah, to get that through. Yeah.
Now, the other two on the business are fairly straightforward. So the tax benefits, like we said, there is the deferred program, and same thing as the personal one. This is only for amounts that you incurred after March 18th. Anything you own before that, again, CRA won't start collection, but you're still compounding interest on those.
Yeah.
There is the talk of increased tax-free amounts, but no details on that one yet. So we'll let everyone know when details comes out.
Yeah, that's why we put a pending there. So hopefully by the second webinar we are organizing,
for sure.
Should have
Actually,
more
Mary
details.
just updated some information there as well. Just an hour ago, the Prime Minister actually just revealed a new updated benefit plan. So we'll touch a little bit on that once. We just have 2 more slides left,
and then we'll do that.
Then we'll actually pick up the update as well.
Yeah, sure.
Okay, so the other one for loan for the business is if you do run a business, majority of the actual relief fund is injected through the Crown Corporation through Business Development Bank of Canada, and that's going to be issued as loans.
As a loan.
Yeah, so yesterday BDC actually just did a webinar online to talk about, actually they spent, I was thinking they were going to actually talk about how they help
policy,
business,
which people really care about.
but instead they spent about 25 minutes talking about
the overall economy,
economy. I know, which is not
overlook.
Business. So if I listed the webinar link here. So if as a business, if you want to apply, just skip to the last 5 minutes, which is when they actually talk about the program. Now, I'm sure, give it another week, more details would come out. Right now, this is still the period of uncertainty, right? There's still a lot of information out there, but we're still missing a lot of the actual action plans to come into place.
Yeah, I'm hoping they will give release more details and shed more lights on how to apply and who's qualified, what's the interest rate in the next week. Yeah,
for sure.
Yeah.
There is one private banking loan that may be applicable to businesses. So again, this is only if the business actually owns properties, right? Then you can basically get a line of credit that's fairly easy.
Yeah, a couple of days, quick, easy, not really much documentation required, but only apply for certain a type of businesses. Owners.
Yeah.
So please contact us if you have any if you want to know more about this program.
Okay, so really, I mean, after discussing all of this, you'll
Mhm.
probably see that the actual relief funds, applying to businesses is not much. And
Mhm.
we're seeing, quite a few questions asking, especially for creative people, for freelance
Mhm.
people who
Mhm.
incorporated.
Yeah.
I guess the primary question is, if you're incorporated, right, and you're essentially still providing just your personal service to
Yeah.
larger businesses, do you qualify for EI? So
Mhm.
as we mentioned at the beginning, if you operate as a corporation,
Corporation. Mhm.
you don't qualify for EI because at that point the moment you incorporate, this is one of the things we discuss
Yeah.
when you're helping clients is
Mhm.
if you incorporate, you don't qualify for EI because you can't fire yourself. That's what CRA says.
Yeah.
So why do people still incorporate? I mean, this is also what we discussed in the last webinar.
Yeah.
Is if you look at the tax break we did for incorporation and T4 employee,
Mhm.
you're saving $24,000 a year in taxes
Yeah.
based on your $120,000 of income. So basically, your 1 year of incorporating, you're already saving more than what you can receive
Receive.
through
Mhm.
EI.
Yeah.
So
and-
really, this is when we talk about thinking as a business. The
Mhm.
moment you incorporate,
Yeah.
right?
Yeah.
Yeah, you don't qualify for EI, but your savings already exceed the EI program you would receive.
Yeah, so
It-
that's why government basically believe anyone who have the capability to incorporate, basically you are taking the control, you are saving that money in your own hand, and then to basically
Than
make
buying
a
the
better
insurance.
plan.
Yeah, because EI is
Mhm.
basically it's
It's
essentially
an insurance. Yeah, yeah.
right?
So from a corporate perspective, there are lots of strategies that you can apply to do your risk management from employment perspective, from a key person perspective, from a different
This is when
variety
we
different.
talked about emergency fund.
Yeah, that's from personal
Yeah.
as well. Yeah.
So this is when we talked about, obviously when you incorporate and that money that you are saving, not
Mhm.
paying to CRA, it's supposed to be acting as an emergency fund
Mhm.
to help you to cover potential job loss,
Yeah.
revenue decrease, and
Yeah.
you need to look at car
Car,
repairs,
mhm.
medical,
Or
home fixes,
Mhm.
or mortgage, or anything like that. So
Mhm.
that's when you need to build up your emergency fund.
Yeah. This is a part of the comprehensive financial planning. The emergency fund is always our first account we look at and review with our client together, because this is set up a cornerstone for your overall financial well-being. So it's very, very important.
Okay. Now the other question is.
Mm-hmm. Oh, there are quite a bit of
Yes,
questions
so
already.
we will look at the Q&A. Is it possible? This is actually a good question. So the question is it possible to revise which EI you receive when you've already applied for a particular one? So this is, keep in mind, any moment you submit the application to the government and you need to revise it, I mean, can you? Of course, if your situation changes,
Change it, yeah.
you always can. But if you look at the actual EI application process, it takes 28 days before you get your first answer approved or not.
Or not, yeah.
And if you basically within that process, you can't really go and change. So once you have that first decision, if your situation changed, then you can go basically contact them and then request for an update
revised.
application, a revised application.
Yeah.
So again, it's timing, right?
Yeah.
You send your well, first you have to prepare all your documents, get your ROE, and then submit your application, wait 28 days, and then wait for a revised one, which could be another 28 days or more. So that's the challenge. So like I said, can you? Of course, it's just make sure that you pay attention to timing.
Yeah, but remember, there's always no double dipping. So basically, if you apply for one, and
you have
most
to stop,
likely you will losing the opportunity to apply for other.
Or if you have to stop that one program,
yeah,
and then wait for the other one to start. And then any benefits that you receive in that previous program will have to be paid back or would be decreased in the new program. Anyway.
That's right. Yeah.
Okay, so before we get to Mary's update on the new benefit, we'll just take a look at the other questions here.
Sure.
Okay.
Small business.
If you don't have monthly payroll running as a small business, can you still apply? So I'm not sure which program are you looking to apply if you don't run payroll. Because if you look at the 10% payroll,
that's only for the payroll.
That's only if you have
the payroll program.
Right. So if you don't run payroll, then basically you can't apply for those programs.
They are not only looking at the 2020 payroll record, but they also looking at the prior
right.
year.
So they're looking into, if businesses decide just to all of a sudden increase their payroll. So with tax, remember there's always the borderline of tax invasion and then minimizing taxes, right? So the moment that you jam up your expenses or something for the specific reason to meet a benefit program, at that point, basically, it doesn't meet the requirements anymore.
And also, usually there's any potential loopholes. Usually will be found quickly and then fixed quickly.
Okay, so next one, which subsidy starts on the 18th? Okay, so that question is about the calculation of the wage subsidy. So the wage subsidy starts on the 18th, and this is so basically we showed an example here. So you need to come up with basically a prorated worksheet. So you need to put in what is your monthly payroll. Then you need to do the prorated calculation based on the dates.
The dates, yeah. For
March,
example, for March, there's only, because the government announced the policy on the 18th, so there are only 10 working days left for March. That's why we have to prorate it 10 out of 20 working days.
And
That's
then the final pay period for June is you have to do 15 out of 22 days for basically the June period.
Yes.
So you be careful with your calculation. Like I said, make sure you keep your, backup records to justify for CRA as well.
Yeah, for sure.
So next one, incorporate one employee of the corporation is still eligible for emergency support benefit.
Right now, we don't have all the details released from the government yet. However, based on my understanding, usually if you are incorporated and if you are, let's say, own 40% and more of your company shares, you usually not eligible for EI-related benefits.
Right. So all the EI-related benefits don't apply to anyone who's incorporated. Now, if you're incorporated and running payroll, the one that does apply to you is the payroll subsidy, the 10% payroll subsidy we talked about.
Yeah.
And again, this is when we looked at the comparison, right, of payroll versus T4 employee, because even if you apply for any of the EI related program, you're getting paid for less than $7,500 in total, right, in a 15 weeks period. So if you incorporate it versus your T4 employee in 1 year's taxes, like we said, you're saving more than $20,000 at that point.
Yeah.
So that's the pros and cons. Right, that's the difference between running a business and just acting as an employee.
Yeah.
Okay, so the major update we have is basically on the new release. Let's just see. The Prime Minister unveiled a new benefit to streamline aid for Canadians who have lost their jobs due to COVID-19. Doubled the Canada Emergency Response Benefit. The aid will replace the two announced last week as part of the $82 billion funding package. So this is the one that we have to, after today's webinar, we're going to spend a little more time
do some research.
What's the revised one? Because obviously, as what we just seen, the package from last week, it really doesn't provide that much benefit, especially to seasoned workers, to contractors, which form up actually a majority part of the workforce nowadays in Canada.
Right.
So once we have update on those new ones, then we can actually help you guys to understand a little more details, because even on March 18th, the 82 billion so-called funding benefit, more than 50 billion actually went out as a deferred taxes to CRA.
Tax-related deferral. So basically means
it's not tax support.
The federal government released this fund to help CRA to ensure that all those expenses will be covered, because they gave us some relief, so we don't have to pay those tax for now. However, 6 months later or a few months later, every one of us still have to pay those taxes to CRA, and then that $55 billion is only for tax deferral.
So it's not actual cash that's being injected by the government. So if you really read between the lines, look at the details, like we said, the EI program is just to support bare minimum. And then the actual $52 billion is just the tax deferral. So I guess this is also why they had to come up with a revised one, is when people start reading between the lines, realizing this doesn't actually help much, right?
Yeah. Actually, this news just released an hour ago, so I guess people still start to pick up those information, and I'm sure government will also release further information to interpret, how to apply, and what's the benefit, and what's the procedure, and so on.
Okay, so next one, let's say, okay, so this is a case, I guess. The question is related to someone who's incorporated and about to start 2 shows, and then they were postponed or canceled. So now you're home with your child who isn't in school. You're also in self-isolation. Do you qualify for emergency support benefit? So basically anyone who's incorporated, the emergency support benefit is still part of the non-traditional EI program.
Yeah.
If you incorporate it, none of the EI programs basically apply to you.
But I think the emergency, remember the CARE program, I guess because we are still waiting for more details, hopefully next week, early of April, you might be eligible because you just back from a trip. You might just have to, self-isolated for 14 days. And because your kids your kids is at home, so you have to maybe, stay at home to take care of them, then you might eligible for the emergency care benefit. But since we don't have a lot of details right now, so let's wait until next week.
Webinar. Yeah. So really, if you look at the all 12 programs, only 2 to 3 start now, and those are basically just your tax benefit and the payroll subsidy.
Yeah.
The other programs, the timing is early April, or some are even May for after filing your taxes. So we're hoping that by next week we're gonna see more detailed instructions from the government on how to apply and clarify also a lot of the questions. Because when we look at the current ones, there's still a lot of questions. Like we said, if if parents, one is divorced and or 2 are staying home, who's eligible, who should be applying? None of those details basically came out at this point.
No, not really. And also, this is probably a best time for us to really review what happened in last year and then review our financial situation right now to see, for example, maybe we can take this time to do our tax filing quickly, like as soon as possible, and then review our financial situation to see where's the gaps, and maybe if you've done enough for your risk management, if you have enough emergency fund, all those things needed to take some time, and then to make a list. Right?
And if you newly incorporated in the past couple of years and never gone through kind of a reduced work situation, this is basically a wake-up call. I mean, I hate to say this, but really a lot of times when people incorporate, and like we show here, right, they have a sudden increase in cash flow comparing to when they're on T4 employment, especially for contract workers. They're not really planning ahead enough of time. They're not setting aside enough emergency fund. They're setting the funds into buying something else or going on trips. And then it's in times like this you realize really the goal and the purpose of having that emergency fund. And also the responsibility, because the moment you incorporate, rather than going with EI paying for the government, then you're looking for the government to look after you, which, as we said, it's $7,500 max. So it really isn't much. So when you take control of your financial situation, you really have to take the responsibility of preparing for rainy day.
That's right. Yeah. Oh, there's a new question.
Okay, so $500,000 profit cutoff for the payroll subsidy. Yeah, so basically $500,000 is the cutoff for
the small business.
Small business. So you if you are no longer the small Canadian controlled business, then you don't qualify for payroll. subsidy.
Yeah, but there are some policy which has no detail at all, saying there will be, hopefully, and there will be some relief also for
larger businesses.
larger, mid-sized to larger corporations.
Yeah, because I mean, if you look at it, the mid-sized to larger size corporations, they have more employees.
Yeah.
They actually need payroll subsidy more than the small businesses.
Yeah, so nothing has been come out like with any detail yet, but we'll keep Tom.
We'll keep everyone posted.
Yes.
Yeah. Okay, let's see. Okay, actually, we have 3 minutes to 2 o'clock.
Wow.
Guess we did
So
good timing. So again, thanks for joining us today. Unfortunately, like we said, you know, we wish we could have more answers and actually interpret more support from the government programs for you. But as you can see from the current situation, this is what we're working with. And sometimes not, you know, knowing not having an answer is also the answer.
Yes.
So hope everyone is staying home, staying safe. You know, definitely we'll keep everyone posted on any further updates. So we'll take some time, I'd say maybe take a couple of days to interpret the new programs, and then we'll let everyone know when the next webinar starts.
Yeah, stay tuned and see you next time.
Thanks, everyone.
Thank you.